All right, let's go ahead and get started. So once again, good afternoon, everyone, and welcome to our Building Wealth program. We'd like to start by introducing ourselves. My name is Malen, and we also have Jamie with us today. In today's presentation, we are going to look at how you can build wealth and set yourself up for financial success. There are 5 steps to building wealth. The first is that you need to learn the language. The second step is to budget to save. The third step to building wealth is save and invest. The fourth step is to build credit and control debt. And lastly, the fifth step is to protect your wealth. Before we get started, we wanted to state that the views expressed do not reflect official positions of the Federal Reserve System or the Plano Public Library. This presentation is for information purposes only. It is not intended to be investment advice. Seek a licensed professional for investment advice. And tying into that last point, we'd like to reiterate that we're not experts. Rather, this presentation will serve as an introduction. Some of you might already have this knowledge and some of you might not. Hopefully you can walk away from this presentation with one piece of information that you can implement into your building wealth strategy.
We'd like to get started by telling you a little more about the Building Wealth curriculum. The Federal Reserve Bank of Dallas created this resource about 20 years ago because studies discovered that the lack of personal savings and good credit were preventing many people from reaching their goals to buy a home or start a business. There's a need for families to build financial capability and resilience. We know that financially stable households make for a more stable economy overall, and building wealth is one resource for people from high school age to adults to help work towards financial stability. The Dallas Fed provides this resource in print for free. And it's also designed as an online guide with built-in calculators, which has become one of our district's most popular resources. You can access it by going to buildingwealth.org. So, what does financial capability really mean? Financial capability is having the knowledge and the tools to manage your money. We don't teach financial education just to check off a box. The materials here will help you make positive changes in your life. Financial education is nothing without making behavioral changes as well. Putting action to our dreams is what makes them a reality. So try not to get overwhelmed with the big picture. Small changes can lead to big results. If you focus on a few small changes you can make this year, then you can add a few more changes next year and build from there. A few small steps that can lead to big results. That's the approach we're going to take with building wealth. So our very first step in this process is to ask, what does building wealth mean to you? For some people, they might define wealth as being able to live in an expensive house and travel around the world. Some of us want to help put our kids through college. Some of us might just want to have peace on this issue in our lives instead of always worrying about money. It's totally based on everyone's own personal values and life experiences. So, now that we have defined wealth, how do you acquire it?
So to create personal wealth, you must understand the language. So the first lesson is to understand the meaning of assets, liabilities, and net worth. An asset is anything an individual or business owns that has commercial or exchange value. So for example, a retirement plan, stocks and bonds, or a house. A liability is your debt, so what you owe. This may be your home mortgage, your credit balances, a car loan, student loans, or medical bills. And then your net worth is the excess of assets over liabilities. So in other words, your assets minus your liabilities equals your net worth. Home equity is an example to illustrate the assets minus liabilities equation. So the market value of a home is an asset. The mortgage is a liability. Let's say your house is worth $120,000, but your mortgage is $80,000. That means your equity in the home is $40,000, and equity contributes to your net worth. Balance sheets are an excellent way to help you to reach your goals. Here is a sample balance sheet. I'd like to point out the assets, liabilities, and net worth. So the assets in this balance sheet is $46,500, and the liabilities is $22,500. So when you do the math, your net worth comes out to $24,000. Buildingwealth.org contains an online guide with a built-in calculator that you can play around with. And the key thing to remember is that your net worth is your wealth.
In our next section, we're going to demonstrate how you can budget in order to save. Most people who have built wealth didn't do so overnight. They got wealthy by setting goals and pushing themselves to reach them. Setting financial goals can help you when it comes to setting a budget and saving for your future. Your goals are why you're making a budget and sticking to it. Having a strong why will help you when you have to make those small day-to-day decisions. So what are your short-term and long-term goals? Think about what some of your own goals might be. Some short-term examples might be to pay your bills on time each month or to put money towards a rainy day fund. Long-term examples might be things like paying off your car, being debt-free in 5 years, or saving for a substantial down payment on your first home. It's okay if you can't think of anything while we're going through this presentation. You'll start to figure out a few when you go through the budgeting process on your own. Next, we're going to discuss some strategies to help you meet those goals. So this is Gabby. She's our example throughout the presentation. Gabby thinks she's doing pretty well and she has a pretty good income, but she does manage to spend it all and then some. Here we see her shopping. She has sales receipts flying out of her shopping bags, a $5 latte in her hand, and she's listening to tunes on her smartphone. As we go through this budgeting to save process, Gabby will realize she's basically living from paycheck to paycheck. So we want to ask you, when it comes to reaching your financial goals, are you doing or are you wishing? The difference is that doers put action to their goals, and they're much more likely to reach their goals and achieve their dreams. If you are a doer, you're more likely to track your spending, live within your means, stick to a budget, pay off your credit cards in a timely way, deposit money into savings each month, and make regular contributions to your retirement savings. Building wealth and financial freedom requires that you begin to track where your money is going, set up a budget, and make some small changes to begin to save. So here we have an example of David's day-to-day spending, and you can see that everything is listed out, whether it's a large expense or a small expense. Tracking your daily spending habits is a very important first step to creating an accurate budget and the only way to really learn where your money is going. So when you start making your day-to-day spending list, include purchases that are made with cash, debit card, check, or charge, as well as money that you might spend through services like Venmo, PayPal, and Apple Pay, among others. If you're doing this off the top of your head, you can probably write down things like your monthly bills, house payment or rent, car payment, wireless bill, utilities, etc. And you probably know about what your take-home pay is every month. We have these income and expense numbers right off the top of our heads, but that's not enough information for you to be able to make a real budget. You have to track your spending as well. You can write down your budget by using a template found on buildingwealth.org or do something like create a spreadsheet or use an app. The trick is for you to write everything down, even if it seems small and insignificant, even if it only cost you 25 cents. You only have to do this for a month or two to see where your money is going. And if tracking your day-to-day spending sounds overwhelming, here's an easy option. Start small and track all purchases for a week, and that might help you get motivated to really budget. This is an example of Gabby's monthly budget. So you can see her income at the top with her take-home pay, overtime, pension, and other things, and her expenses at the bottom. At the very bottom of the spreadsheet, you see the total monthly net savings calculated along with how much to invest. After tracking her day-to-day expenses, Gabby prepares her budget. and she realizes that she's actually spending more than she's bringing in. She's not building wealth, she's building debt every month to the tune of $85. You can see this on the budget by looking at the monthly net row with the current expenses. Her monthly net equals her income minus her expenses, so that minus $85 you see shows that she's spending more than she's earning. The next column shows some spending changes that Gabby makes to her budget. She makes some small changes to her lifestyle to help her build wealth. She increases her income by getting some regular overtime, which adds $40 a month. She cuts back on her premium cable TV, clothing spending, and running around money she spends on gas and eating out. You can see from the new budget that she's developed a system that will enable her to save $125 a month, and it's still a budget that she can live with. As another example, here's Sam's budget. Sam is someone who lives and works in Plano. He's single and lives in a one-bedroom apartment by himself. He makes about $16 an hour, and these are his actual living expenses. So, since doing his budget, Sam's realized that he needs to make a little more money, so he's working overtime when he can and creating digital content for friends to make additional money on the side. So when Sam really started looking at his budget, he decided that he needed to find a less expensive apartment, that he only needed one TV streaming service, so he dropped Hulu. He didn't need to spend as much money on clothing, and he could probably figure out a way to entertain himself less, and since he's working an extra job and overtime, he has less free time anyway. As you can see from taking his current expenses and making those spending changes, his new budget uses several small items to help add up to his larger goal. The same is true for you. Making a lot of small changes can help add up to reaching your goals.
Step 3 in building wealth is to save and invest. Here's a tip from Dwight R. Lee and Richard B. McKenzie, the authors of Getting Rich in America. Take the power of compound interest seriously and then save. The investment pyramid is made up of several parts. At the bottom, you have your financial foundation. Next up, you have short-term holds. So short-term holds is money that might be needed within the next 3 years or that must be easily accessed. Above that, you have medium-term holds, which is money that won't be needed for 3 to 5 years. Next up, you have long-term holds, and at the very top, you have your high stakes. So the important takeaway here is the foundation. So what is included in a strong financial foundation? Well, you have your financial plan, and then you have your insurance. So with regards to your financial plan, you want to know your net worth. You need to set goals and make a budget. And have your financial records in order, which means you have your records organized, you keep the paper you need organized, and you shred the paper you do not need to keep. Financial records also includes keeping records for income taxes, keeping a copy of your tax receipts and tax forms, checking your credit report every year so you can watch for identity theft and keep your credit in good shape. It's smart to have a strong foundation before you start investing in higher risk return investments like stocks. Other important elements to your foundation are your insurance policies for peace of mind. So things to consider beyond your foundation are things like financial goals, your time horizon, financial risk tolerance, and inflation risk. With regards to the investment pyramid, the first layer above the foundation should be the money that might be needed within the next 3 to 5 years. So this is money you're not going to want to take much risk on. So you'll want this in an FDIC insured savings account, savings bond, MyRA account, or other account that you can get to when you need it. These insured accounts are no risk, but at the same time, low return. For your long-term savings, you'll want to invest in a little higher risk so you can get a higher return. At this point, you'll be ready to talk with an investment advisor and start making deposits to a retirement account or a 401k if your employer offers one. So again, we don't give investment advice other than do your research and talk to someone who is a licensed professional. So this may be basic information you already know, but an excellent first step in building your wealth strategy is getting a basic checking or savings account started at a bank or credit union. So let's talk about some of the reasons for using a bank or credit union. You save money on check cashing fees and money orders. Your money is kept safe. Example, a savings account at a financial institution is fully insured by the Federal Deposit Insurance Corp for about up to, I like to say up to $250,000. You can take advantage of direct deposit and monitor your balance online and access your money from anywhere and build a good banking relationship, which is an important part of your credit history that we'll talk about later. Financial institutions offer a variety of insured savings accounts, each of which pay a different interest rate. So you have your general savings accounts, which earn interest and allow access of funds at any time and movement of money from account to account. You have money market accounts, which earn interest and may offer check writing services and impose no fees with a minimum balance. And then there's certificate of deposits, which are purchased for a specified term and return principal and interest at the end of the term. I believe there's early withdrawal penalties that apply. So here are a few tips for investing when it comes to investing your money. So remember, when investing, find good information to help you keep informed, to help you make informed decisions. Make sure you know and understand all the costs associated with buying, selling, and managing your investments. Be aware of investments that seem too good to be true. They probably are. And investigate financial professionals before you invest. Your state securities board provides free services to check credentials. And again, the state securities board provides an easy way to check out financial professionals before you invest. A lot of people who are victims of financial fraud and scams, they probably didn't have all the information needed to make solid investments. Some people present themselves as financial professionals and they're not. Some aren't even registered, or in many cases they are registered or already under investigation or have had charges or have been charged with violations. It's always important to do your research before you invest. And again, each state security board provides the service for free. So anyone who sells any kind of investment in Texas, for example, whether they are based here or not, is required to be registered here. And the Texas State Securities Board checks their background in a national database and verifies their credentials are up to date. You can learn more about this on the Texas State Securities Board website. There's also brokercheck.finra.org, and both of these links are going to be provided in a slide at the end of the presentation along with other additional resources that you can explore. Other investment options include employee benefits, such as IRAs, 401ks, and qualified plans. These are ways to save for retirement while paying lower income taxes on your current year's income or minimizing the impact of income taxes later, depending upon the type of investment. So check with your employer to find out what retirement plans are offered. Many employers will match a percentage of your contributions towards retirement accounts and/or investments. If that is the case, you should put the maximum you can towards these accounts. It's a great way to increase your savings for the future. Two other investment options include investing in your home and starting your own business. So investing in your home, one strategy is to pay higher monthly payments on your mortgage. When you do so, your home equity rises, and home equity in this case is the difference between the market value of the house and the balance on one's mortgage. Another strategy is to take a 15-year mortgage rather than the traditional 30-year mortgage loan. With regards to starting your own business, use your skills to make money and have it be part of your wealth creation plan. I'm going to hand it over to Jamie. So step 4, step 4 is to build credit and control debt. So now you're budgeting, saving, and investing to build your wealth. What do you do to build your credit? How do you build your credit? So the important first step is to know what's on your credit report now. So even if you haven't used credit in the past, you might have information on your credit report and it may be incorrect. And your credit report shows everything about your payment history, such as late payments, and lenders use credit reports and credit scores and other information such as employment history and income history when making the decision to extend credit. What are ways you can make sure you have a payment history? Well, that includes building your credit. So for example, you can pay for gas for your car and any tolls on your credit card and pay it down or off every month. This helps create a payment history and helps you utilize the credit card without spending an excessive amount of money. You can buy groceries with your credit card or pay monthly bills. The important thing to remember is that you want to pay it down or off every month. So don't spend money that you don't have.
So if you review your current credit report, that's an immediate action step you can take this year to get the ball rolling on achieving your goals. There are 3 major credit reporting companies, which are listed there on the screen for you. And typically each have the same information since most creditors will report to all 3. You can go to www.annualcreditreport.com as the only legitimate source for your free credit reports, which is authorized by federal law. Remember our definition of net worth or your wealth? Your assets minus your liabilities equals your net worth. Your liabilities are debts, and those debts reduce net worth. Interest paid on debt is not invested or saved. It's just money that is gone. So, what is a credit score? Your credit score is a statistically generated number representing the likelihood that you will repay on time. The higher the score, the less risk you represent to the lender. Your credit report is used to build your credit score. Your credit score is not free, but some banks and credit companies do provide free credit scores with their account service. It's a good idea to check your score before you apply for a loan to find out if your score is eligible for the best interest rates. If the information on your credit report is accurate, then your score is accurate because it's based on the information from your report. So, what's included in a credit report? The most important aspect of a credit report is your history of payments. So, were your payments made on time or were they late? If your payments are late or delinquent, this will lower your credit score, which means you'll probably have to pay a higher interest rate or even face refusal. Another aspect of your credit report is the amount owed on credit accounts, which also affects your score. Now that you know what's included in your credit score, let's briefly look at what's not included. Your credit score doesn't include your age, race or ethnicity, income, job, marital status, education, your length of time at your current address, or whether or not you rent or own. The Federal Reserve Board of Governors publishes a guide, and there's also great information on the ftc.gov website, including a sample dispute letter to send if you find a mistake on your credit report. So, once you know your score, there are ways to improve or repair damaged credit or establish credit for the first time. Please note that a recent credit history is more important on your credit score than an old credit history. One option might be a secured credit card, which is a good idea for building credit. It generally requires a deposit, usually equal to your credit limit, and after 6 months or a year at the most goes by, the secured card company will return your deposit and your secured card becomes a regular credit card. Some people do confuse these with prepaid cards, but prepaid cards do not build credit. Another type of starter account may be a retail store card or a gas card. Just make sure that the card provider will report payments to the credit reporting companies in order for you to build credit. We know that credit is a good tool to have, but always ask yourself if you're ready to take on a new credit obligation. You want to have credit if you ever need it, but ask yourself if it's better to save for some purchases like a TV. Always think about the pros and cons of financing your purchases. So just a few quick reminders on building good credit. Develop your budget and stick to it. Getting a new credit card does not mean that you have more income. Continue to save money so you're prepared for a rainy day. 3 to 6 months of living expenses are recommended. Pay your bills on time and keep your credit card balances low or aim to pay them off monthly. You can also check your credit reports annually and dispute any incorrect information. Building wealth requires that you take steps to control your debt. All of us have an occasional financial emergency, such as the car needing new tires or a car that needs to be retired completely. We have some warnings about some high-cost credit and predatory lenders. So let's start with payday advance loans. Many people who don't have emergency savings or who don't have credit available on a credit card or who don't have family or friends to go to for a loan naturally think their only alternative is a payday advance loan. These generally have many extra fees, higher interest rates, and tend to get out of control and put you deeper in debt if they're not paid in full on time. Predatory lenders often target senior adults or low-income people by phone, mail, or in person, and they tend to offer very high interest rates and excessive fees. Beware of credit repair services that claim they can erase your bad credit. If it sounds too good to be true, it is probably a scam. Also take steps to guard your identity. Never give out personal information over the phone, through mail, or on the internet. Shred or destroy old bank and credit card statements and all other private records before tossing them in the trash, and give your social security number only when it's absolutely necessary. Let's make it a goal to be prepared for these emergencies and find ways to build emergency savings and build credit. Research shows that having an emergency savings of as little as $500 can remove the need for most consumers to go to a payday lender. Building an emergency savings is a good first step in a building wealth action plan. If you're concerned about your credit and identity theft, credit freeze is also an option that's now available. It's brought to you by a federal law that began September 21st of 2018 and allows you to freeze and unfreeze your credit for free. You can also have year-long fraud alerts to monitor things that may be on your credit report. And you can find more information about this on the FTC Consumer Information blog.
So as you build your wealth, it is also important that you protect it. So what does that mean? Let's take it back to the basics. And we're talking about insurance basics. So insurance is an important part of your financial foundation that will help protect your wealth and assets. There are all sorts of different types of insurance for yourself and your property. Let's talk about the basics of a few of them. You have auto insurance, which you must have liability insurance at a minimum to cover injury to other people or damage to their property. If you have a car loan, you might also be required to have physical damage coverage. Then there's home or renter's insurance, and this protects your home and possessions in an event of a fire or theft. Additional insurance may be required to cover flood, earthquake, etc. And there's home warranty, which is an annual service contract that covers the repair or replacement of important appliances and system components that break down over time, such as heating, AC, plumbing, etc. So a good action step to take every year is to review your property and auto insurance coverage, deductibles, and premiums. It may be time to shop around and save on your monthly premium without taking on too much additional risk. When it comes to building wealth and working on your financial foundation, always take into account other types of insurance. And other types of insurance include health insurance, flexible spending account, disability insurance, life insurance, and long-term care insurance. With health insurance, you're required to have coverage by the Affordable Care Act, and it's an important part of the work benefits compensation that can significantly help your budget. Then there's flexible spending account, where you save pre-tax dollars in an account to cover deductibles, co-pays, prescription and over-the-counter drugs, and other health expenses not covered by insurance. This does not roll over year to year and can also be used for childcare. Disability insurance helps if you are sick or injured and unable to work for a long time. Life insurance, so in the event of your death, life insurance pays money to the person of your choice, who's your beneficiary. And long-term care insurance helps pay for health-related items like nursing homes, assisted living, in-home care. So all of these types of insurance are made to help protect the wealth you have accumulated. We'd like to leave you with some important questions. Now that you've gotten an overview of building wealth, has your definition of wealth changed? And if so, how? Are your financial goals still the same, or do you have some new ones? What strategies are you going to take, and what is your next step? So here are some links to additional resources. You can find the Building Wealth curriculum on buildingwealth.org. Federal Reserve Education has some great webinars that you can take on finances. The Texas State Securities Board has some great resources on their site if you'd like to invest your money and how. Broker Check is a free tool that helps you make informed decisions about a broker or firm if you're wanting to invest. They provide information on a broker's employment history, licensing information, and more. Annual Credit Report is offering weekly online credit reports until April 2021. And this, I believe this used to be a yearly access, and it is free of charge. So now they're doing it weekly. You can view FICO reports through myfico.com. The Federal Trade Commission has lots of resources on money and credit and expanding your wealth. If you're looking for information on how to freeze your credit, if you suspect ID theft or suspicious activity, check out this link. And lastly, here is a link to a class that we recently hosted on how to create simple Excel budget sheets. So that concludes our presentation. Thank you for taking the time to attend our virtual program on building wealth. You can find more resources on our website, planolibrary.org, as well as our blog, planolibrarylearns.org. Does anybody have any questions?
We did have one question in the chat that mentioned that in some cases it is not possible to avoid giving out your social security number for business purposes. For instance, if you are purchasing a phone connection or internet service, someone may ask for your social security number over the phone as part of that. So we would like to just reiterate, as part of that, there are instances when you may need to disclose personal information. We are recommending that you just do your research ahead of time to make sure you know who you're talking to and that the information is required for their business purpose before you share any of that.
So we had a question that says, can you please repeat the Plano Library resource to create an Excel budget spreadsheet? So this presentation is going to be emailed out to everybody who signed up for it, and that additional resource, that slide is going to, you'll have access to that. But if you go to planolibrarylearns.org, you can do a quick search of Excel budget. You can use those keywords and it should pull up the class for that. Are there any resources available for teaching kids about financial literacy? That's an excellent question. I'd like to say we have lots of resources on our website, and I'm completely blanking as to what's out there. Jamie, are you familiar with any programs that we've done in the past or are upcoming?
I don't know that we have anything upcoming. I have completely blanked on the name of the program that we were working with for financial literacy. Building Wealth is the only thing sticking in my head. I'm so sorry, guys.
Check the Dallas Federal Reserve for any resources. So we had a question about Bitcoin investment, if it's legally approved. The person has not invested in Bitcoin. That is outside the scope of my knowledge. Again, reach out to a licensed professional for information on how to invest. Well, these were all really great questions. Once again, thank you for taking the time to attend our virtual program. If you have any further questions or are looking for additional resources, you can always book a librarian. So that's a resource that we have. If you go to our website, you can look into that, and that gives you a 30-minute one-on-one assistance on how to find additional resources. So thank you, and that concludes our presentation. Jamie has an additional source for kids. Look at Thinking Money resources. Thank you, Jamie.